through we're going to take you through this webinar by first explaining the use of the RMI indicator, because the screens that we've really developed based on our understanding of a combination of how we should look at the fundamentals, and then how we should weigh that in terms of actual market momentum, because our markets are not always logical, and sometimes they chase momentum, sometimes they chase value. And being able to differentiate and time the two is what allows you to ride the entire cycle. So that is what we want you to be able to understand. So for those who are new and not familiar with the RMI indicator, I'll spend the first 10 to 15 minutes just getting you a basic insight into how it works and what it is. It should be very, very simple because most of you would be aware of, technical indicators. And when we think of technical indicators, what you really need is a noiseless indicator, which means it has fewer whipsaws and gives you buy and sell signals and does so faster than most others. So that is what we've been able to achieve, with a little bit of math, a little bit of smoothing of data and so on. But doing so allows you to, speed it up, because an indicator is an indicator. When people ask about, questions relating to, okay, does it test like something else and so on? The simple answer is it is still an indicator. The what it's really done is it can be faster than maybe an MACD. So the buy sell signals that you get in an MACD can sometimes be late, especially if you have a shorter term, move in the market. You miss the first 3 days of the swing, and we try to be a little early on that. So usually 3 days earlier is where you will get the signals, is what we've really experienced. The second thing which will end up happening is, like I said, noiseless, which is that if you look at something like a rate of change, you find it zigzagging on a day-to-day basis, and therefore smoothing that noise out and making it more usable becomes the secondary aspect. So with these two aspects in mind, I simply rewrote the way we should calculate momentum. Okay, but that doesn't change the idea that it is an indicator. It is not a trading system. So sometimes people can mistake, because we say buy sell signals. Every indicator, including an MACD, gives buy sell signals, right? But the point is really getting them faster and smoother in time. And that is sort of what we end up doing here. And then we end up also then learning how to use it in a combination with different time frames. So these are broadly the advantages that you actually get. But these are some of the basics that I will just quickly take you through. The advantages I've already highlighted to you. And the basic system is that you look at every indicator, whether it's MACD or any momentum indicator, as one that moves up and down around a central line. And that central line is basically point 0 when the momentum or rate of change is near 0. Okay, so we are not talking of things like RSI or Williams percentage R or stochastics. Those are indicators that move from 0 to 100. We are talking of things like MACD, ROC, etc., which don't really have a range. Okay, so it's not 0 to 100. If the momentum continues, the indicator can go higher. If the momentum is very high, it can go even higher. But typically, a stock in a certain time period or in a certain bull market tends to have a momentum range. So it will broadly have a range where it will fluctuate from the top end of the range to the bottom end of the range, going above and below the 0 line. Okay. So we simply plot the momentum like this blue thing. And like in every signal, if you even used MACD, you know that we usually plot a 9-day exponential moving average on top of it. The reason to do that is to generate the buy and sell. And usually it's a 9. So the 9-day EMA generates the buy and sell signal, which means that the average of the indicator itself is run. And every time there's a crossover, it generates a buy or a sell. Okay, so this is how it gets really simple. So first thing, it's like just like a wave moving up and down below a 0 line, central, and it generates buy and sell signals. So when there is a crossover like this, we call that a buy signal. When there is a crossover like this, we call that a sell signal. So what is the object of having a cycle-based indicator? The objective is that once you get a buy signal, you want to be able to ride the entire move to the top and not get out early. This is one of the classic problems people face, is that they get out early. And secondly, if you're looking at buying, if it is already up here, okay, the indicator is already up here, then it's already too late. Having the patience to wait for it to turn around, come back, give you a fresh buy signal, and then give you a new entry over here is what is called patience, right? A lot of people complain about not having patience. So patience is the second thing that the RMI will instill in you, that fine, I missed the current cycle, I want to get in. I'll wait for the next cycle. There's no hurry. I don't need to jump in on every trade. So it sort of helps you get that patience in place. So even if you're in an up-down market, you want to play both the long and short side, it allows you to do that as well. So that's the simplicity of it. If you've used the technical indicator before, you will have no difficulty in using RMI, and you will be extremely satisfied that it's faster and smoother than others. And the speed is essentially the main issue, because you want to be ahead of the curve. And like I said, 2-3 days ahead of MACD can be a huge advantage in terms of being early in price momentum. The second thing that we really tell some people to do is try and use, 2 time frames. And yes, this does work across time frames, which means you can go to a 15-minute chart, you can go to a daily chart, weekly, monthly, quarterly, whatever time frame. So if you're a long-term investor, you look at monthly, quarterly time frames. If you're a short-term trader, you look at hourly, daily for 4-5 day swings. And if you're an intraday trader, you may even combine a 5 and 15-minute kind of time frame. Finally, just comes down to what you want to do and what you want to really achieve in your trading and investment journey, right? So it allows you to do that. What we recommend is, in the end, once you get the hang of using the RMI, that you end up using at least 2 time frames. The reason is very, very simple. It's the oldest reason on the book for trading. That is, if the larger trend of the market is up, we should trade the bullish side of the market. If the larger trend of the market is down, we should trade the bearish side of the market. So by combining 2 time frames, say daily and hourly, all we are saying is, let the daily chart determine what is the trend. And then on the hourly chart, we can trade each and every buy signal. So if the trend on the daily chart is bullish, which means the indicator is in buy mode, then every buy signal on the hourly chart is a reason to, take a bullish trade. So it becomes very, very simple that every time you want to buy and then you want to exit, you want to buy, you want to exit. You don't want to trade short, because if the larger trend is up, you notice that more often than not, pullbacks are very, very small. Or if there is a consolidation, it is a time consolidation. So you don't really get enough room to make a killing trade. So why spend all that time and energy for a 2 rupee correction when the next move up could be 6 rupees on the upside, where 2:6 is a good stop loss for the next trade on the bullish side. So if you have that kind of thinking that you want a risk reward that is 3:1 and only take those trades, then you'll always trade in the direction of the larger trend. So if the larger trend is down, you want to do short exit, short exit. If the larger trend is up, you want to do long exit. It's only in an up-down kind of market which you get sometimes where you may want to be long and short, but it should not be a bullish market to do the both long and short side of the trade. So these are basic determinants. So if you're trying to trade both long and short, it should be a larger corrective market, downward market, where you get sharp bear market rallies. But if it's a bull market, you should only be long exit, long exit, long exit, and not trade the short side. And so using 2 time frames, the higher time frame helps you determine what is that larger trend. Is it bullish or bearish? And how should I trade it? And then you are able to trade it on the lower time frame. So this simple combination of 2 time frames, helps you achieve this end result. Okay. So I've already explained some of these things very, very simply. And so what I'm going to do is I'm going to move to strike itself, where we can look at the indicator. And what I've opened up over here, okay, on this chart, I'm sorry.
Rohit, if you can go on a light mode, please.
Yes, I'll do that. Okay, so what you're seeing now is the RMI indicator itself. And what I've done is I've opened it through the setup. Okay, there are 2 ways that you can access the indicator. One is going to the left-hand side, going into scanners, which is what I've opened. Okay, so once you open scanners, it will show up as a tab on top, like here. And then under that, you'll find on the left-hand side something known as Rohit Scanner. This is one way of accessing the RMI. So the RMI is here plotted below the Nifty or Bank Nifty, whatever I click on. So Bank Nifty is the first thing on top. I click here on the daily Bank Nifty. So it opens the daily chart showing the RMI at the bottom, the Bank Nifty on top, along with the Bollinger Band and the 40 exponential moving average. Now, if I want to access the indicator on a particular chart or a particular security, all I need to do is type in that security on top. Say I type in BHEL. If I do that, BHEL opens up. I open the chart of BHEL. I go to technicals. No, I go to chart. I say Rohit Setup. The moment I click on this Rohit Setup, what it will do is again the same thing, that it will show me the indicator at the bottom, stock at the top. Okay, on the daily time frame right now, you can click to weekly and monthly if you want, and along with the Bollinger Band and 40 exponential. Now, why do we have this EMA, Bollinger Band and 40 exponential? It's sort of the setup that we try to use while placing our trades. But here's the thing, now in live action, what I'll try to show you is how buy sell trades actually happen. Let's just take the last two cycles. So you can see this dotted line over here, right at the bottom. Okay, this dotted line is your zero line. And as I explained earlier, that if we think of the RMI as a wave which goes above and below the zero line, what you will end up doing is that you will end up seeing this as a cycle. Like this is one cycle, this is another cycle down, another cycle up, and there's another cycle down. Okay. So now these are cycles for you. The question becomes, how do I trade this cycle? And which are the trades that I actually take? Okay, so let us try and answer that so that you know it simply. See, while you may have used other indicators, and I'm sure nobody would have told this to you very, very specifically in terms of where the right entry is. Nobody tells you that. And that is the secret that you're going to come to know right now, which you will not find on any other webinar. Short, the simple thing is that with any momentum, the whole idea is that the meaningful buy signals are those after the cycle completes. What does that mean that the cycle completes? It's when you go up, you get a sell, you come back to zero, and then only after you have fallen below zero, the next buy signal is relevant. Now, whether the buy signal after coming back below zero occurs below the zero line or above zero line is okay. Like here, you came to the zero line, you gave a buy signal which is above the zero line. That's also okay. But the important thing is that the cycle should complete back to zero. Okay. Now, why do I give so much importance to this? It sort of tells you that yes, you've had a long enough consolidation over here from where a fresh move to new highs can actually occur. If you haven't had that, that longer consolidation and you don't really get the RMI coming back, then what it really means is that this is an ongoing trend which is not over. Okay. So in a bullish market, if I'm looking for buy signals, these are the relevant buy signals like this one, which has occurred after, we are below zero. This one again from below zero. Here it looks like we did go slightly below zero, so it's relevant. So even this buy signal is important. Okay. So can be this, so can be this one here. All of these are important. So whenever you get a buy signal, what is the trade? The trade is essentially that you'll try and put a stop loss near the most recent low in the market. Now, because we are not really using wave analysis here, we're probably thinking about, the momentum itself. You cannot really set yourself a target. You can say that, okay, the next resistance is at the average here, and the next resistance after that is at the upper band. So the way you really then, trade this is ride this move as long as you can. And as long as you can mean two things. One is till you get a sell signal. And second is till you actually break something. Breaking something means you either break a moving average or you break a trend line or something, some kind of a support, or simply on classic Dow theory, if you break the previous low, if you're making a higher high, higher low pattern. So let's take this example. You made a higher bottom, you made a higher bottom, but this higher bottom broke over here. And that sort of becomes your stopping point. And if that coincides with a sell signal, all the more better. So sort of, you use a trailing method to ride the trend as far as you can. And as long as there's no sell signal or there's no break off at any particular level, you out to, ride it to the fullest extent. That is the essential purpose of, using this. Now here I'm using a daily time frame. When we look at the investment outlook, we'll try to do the same thing on a monthly or a quarterly when we are looking at valuations. Because there, then you can have much longer cycles. I mean, just to give you an example, let's look at the monthly chart or the weekly chart here. You will find there are much longer cycles which last for many, many months. So on the weekly, you'll find this buy signal here, which occurred, say, in September of 2022. And it allows you to take this entire move up before you get a consolidation. And then there's another buy signal here. So it gets cleaner also, sometimes on higher time frames. Okay. And then you end up getting moves like this, which have just not broken the moving average. And since it's not come back to zero, it's an ongoing trend. There's no trend reversal. And you try and ride the entire move after the buy signal that occurred way back here. right? So this is how for slightly higher time frames, it's even more powerful because you can have long holding periods where you can ride it, and you can combine this with an even higher. So you can actually move up to a monthly and then look at, oh, this entire cycle was simply one move that started back here and it's still going on because you really didn't complete this cycle and then turned up again. So this does happen, and in that period, then you may not have broken, the averages and gone up. Sometimes you may, and that is where some good trade management of, exiting a bit or entering a bit also helps. But most of these cycles are very, very clean. So, so even if we just take up Nifty, for example, you can same thing. We go to the Rohit setup on Nifty. Now, I did mention earlier the advantage of using two time frames, and I'll just show you how two time frame scanning and analysis also can be done. So here you have a fair idea of whether if you're looking at monthly or you're looking at weekly, multiple cycles are sort of captured until there is no reversal. The trend has really not changed, right? So that's how you can think about it, unless you're overlaying something else to say, okay, maybe it's getting overbought based on sentiment or something that may sort of give you reasons to change your position size in the market, but you don't have a final trend reversal based on the weekly indicators. I think only this week the RMI is sort of coming close to a bearish crossover, but prices have not yet reversed. Okay, so this is how the setup is. So there are two things that we end up doing. One is, now you've looked at the buy sell indications. I've also shown you the important buy indications are after you came back below zero. Now, if you're in an up down market, which is slightly more bearish, then you have to do the reverse of that, which means every sell signal from above the zero line is important, not the ones which are in continuation and below. So you'll have to turn your head slightly upside down. So for example, there is a sell signal here. Okay, after that it goes down here. It didn't go back to zero. It again went further down. So this ends up being one continued trade where it didn't go above the average is also the midpoint, and then only gave a buy signal over here. So this is the actual trend reversal happening is much lower. And then the next sell signal occurs only over here, and the next buy signal occurs only over here. So in this kind of an up-down market where the market's falling 2000 points, rallying 2000 points, you get very clean signals. As you can see, most of them from buy to sell are a complete move, which you are then able to capture even from here to here. It's another complete move. So in an up-down market, you can trade both sides, and the methodology of looking at sell signals is just the inverse of looking at buy signals. The buy signals we are looking for below the zero line. The sell signals must be from above the zero line. After you have gone above the zero line, then you should get the sell signal. This, we did not go back above zero, and that is why these are what we call as false signals or whipsaws, right? These are the whipsaws where you're getting whipped around, but it's really not resulting in a trend reversal. And for that, we can use some kind of an average or trend line to really discard it. So this is broadly the use. And the last one I was mentioning is that if you want to scan stocks based on the RMI itself, then all you have to do is open the Rohit scanner. You have multi-time frame access here. I already spoke about using, combining two time frames. So one of the simplest things that you can do now with scanners is just take the example that I gave. I said that, okay, I want to buy stocks, but where the daily is already in buy mode, okay, and on the hourly, I'm getting a new buy signal. So I can actually do a quick filtration to check which are the stocks that are giving me new buy signals. Now on this, I'm sort of getting nothing. Okay, and the reason I'm getting, okay, this is because it's set on only indices. So you can choose your basket. Say, for example, I may want only FNO stocks. Then possibly I could get a signal. So now at yesterday's 3:30, so I put this on live mode. So live mode simply means on the last closing. So on live mode 3:30, I do have an hourly new buy signal showing up. So this then can be checked. We can click on daily over here also. And if you click on hourly, it will open up the hourly chart. So you see this bullish crossover coming on the hourly chart after this correction. And then that becomes your indication key, okay, you got a 2-day pullback. Is that pullback over? You're getting another buy signal on the hourly, and you can use that. Like I said, the low of the day would become the stop loss and so on. Remember, this is not a trade. I'm just explaining to you the usage. So this is not specifically advised to, don't go and take a trade blindly. First, get the hang of this indicator and how it works. Try it out a few times. That will give you confidence. But this is a very quick way to scan. Now you can scan similarly on different time frames. Right now, what I did was hourly and daily. Now, if you're a long-term investor, you might want to do a monthly scan. You might want to check out which stocks are giving new buy signals on the monthly chart. So you simply look for new buy signals on the monthly chart and click on the monthly, and it will open the monthly chart on the right hand side. So you might find some interesting buy setups if you actually just click through. Some of them may be just extensions of the previous trend, so you don't want to jump and buy right into something at an all-time high. But you may suddenly find something which is consolidated and is giving you a fresh buy signal, which can be very, very interesting. So that's it from me on the RMI. I hope that's given you insights. If you still have questions on it, we'll take them at the end of the session. And now I'd want to really hand it over to Gaurav so that he can give you an oversight into the valuation metrics and then combine it with this as well.
Yeah, Rohit, before Gaurav takes over, it will be better if you can show the users as to where to subscribe, since everyone's free trial is over. 7 days free trial, and whoever wants to subscribe can just go to plans and billings, and you can choose your term and you can subscribe. Of course, we are having the new options module also. We'll take a lot of sessions on the options module, which we have introduced of late. Yeah, and many more things are coming up. So yes, we look forward to see you subscribing. So yes, thank you, Rohit. So Gaurav, morning, and you can start. So Gaurav will be explaining as to how to see the valuation and how to combine RMI plus valuation, and he'll also discuss on the sectors which are highly overvalued and undervalued right now. So yes, Gaurav. So the Q&A will be taken up at the end of the session, please. Note down all your questions. Thank you. Yes, Gaurav, it's all yours. Thanks.
Hello, hi everyone. So I'll just start with the presentation. Yeah. So just a minute.
You can share your screen, Gaurav.
Yeah, just doing that. Yeah. Is my screen visible right now?
Yes, Gaurav. I'll just take a confirmation. So please type in the chat if the screen is visible, gentlemen, ladies and gentlemen. Yes. Okay. Fantastic. Yes, Gaurav.
So as
You
Rohit
can
is already explained the first topic, which is the RMI indicator, I will move on to the next topic, which is understanding valuation and why it is important while we are doing investing. Let us start this topic. So research has showed that 80% of a stock's return can be explained by starting valuation. So starting valuation means at the time we are starting the investment. So if you can see this graph at the bottom, as your holding period increases, more and more percentage of the stock returns are actually dependent on the starting valuation when you started that investment. This is why when you are doing any long-term investment, you should look at the starting valuation. So the most commonly used valuation ratio is the P/E ratio. However, it cannot be used every time. So the P/E ratio cannot be used for unprofitable companies or say early stage startups. Similarly, P/E ratio does not work well on commodity companies and cyclical companies. And the P/E ratio does not work well for manufacturing companies which have high depreciation. So now let us look at some other valuation metrics which can be used. So for the manufacturing sector, say like something like the auto sector or the commodity sector, we should use EV EBITDA or price to book or market cap sales. Similarly, for banking financial industry, we should use the price to book ratio. And for IT sector, FMCG sector, and the AMC sector, we can use the P ratio. Now let us look at some examples and try to combine valuation with RMI to understand how we can time our entry and exit better. So just let us look at Tata Steel for an example. So Tata Steel, as we all know, is a commodity company. And what I just described in the slide before was that in commodity companies, while investment, you should look at EV EBITDA, market cap sales, and price to book, but you should not be looking at the PE ratio. So for example, just let us study the Tata Steel stock and compare it with its underlying profits. So this is the 10-year chart of Tata Steel. If you would be looking over here in 2014 mid part, we made a top somewhere around 50 rupees. But at that time, the company was generating very good profits. From there, the stock fell all the way to somewhere around 20-25 rupees. However, the company ended up in a loss. From there, again, the stock price went up to 65, where the company was again making a very good profit. So, if somebody would have invested over here in this range in mid 2014 by looking at this supernormal profits, he would have got stuck in the stock and probably the stock fell 50% from there. Similarly, in early part of 2016, if somebody would have got scared by looking at such a huge yearly loss of 4,000 crores approx, he would have missed this huge rally from 20 to 65 or 70 all the way. Similarly, in 2018, again the stock peaked somewhere around 75 or 80. At that time, the company made a very good profit of 17,000 crores, as you can see at the bottom part. Then the stock again fell during COVID, where it bottomed around say 2025. But at that time, if you see the profits, it was hardly anything. So it's a very small amount. Looking at that time, at all the negativity, pessimism of COVID and fall in metal prices, that how will this company make profit? If someone would have not invested, he would have missed this entire rally from say 2025 all the way to 145 levels, where the stock again topped out. And just see the profit, 41,000 crores. So at that time, I remember seeing the news where some news was coming that Tata Steel has made more profits than TCS. It is the most profitable Tata company and so on. So if you got stuck in those, I should say, over optimistic news, you'd have got stuck in Tata Steel for a good 1.5 years and made losses also. So this is not the way one should approach commodity companies or manufacturing companies, something like an auto sector or pharma. You can also call it a high-tech manufacturing sector. So I will just see some examples in Strike as to how to value or how to look at commodity or manufacturing sectors. So we'll just look at the correct way of investing in Tata Steel. So if you just type Tata Steel over here, go to charts, then over here select the strike valuation setup. Just select the time period over here. And see, like the recommended, it is showing that price to book is a recommended method of valuation. Just switch to price to book. And you will see now the valuation is exactly the opposite of what we just saw. So over here at the top, somewhere in 2014 mid part, you see the valuation is very high as it is touching the upper red line over here. The RMI is just giving a crossover. So this is a good time to exit. However, if you just switch back over here in mid 2014, the company was making a very good profit. Then the stock fell all the way in mid 2016. It bottomed, where the price to book reached somewhere around 0.73. And if you see, it is hitting the lower green line, which is actually the -1 standard deviation. At this time, the RMI also gave a positive crossover. And if somebody bought the stock during this zone, during this 2025 zone, then you see the price to book rallied all the way from 0.75 and ended up somewhere around 2 or 2.5. Here the RMI again gave two sell signals and the stock topped somewhere around 67-70 zone. From there, the book value started going all the way down. Over here, we have reached a good value zone. If you see, some here the book value has reached the bottom part, which is the -1 and the -2 standard deviation lines. The RMI gave one crossover over here somewhere around say 35. However, the stock fell once due to the COVID crisis, but the RMI again gave a positive crossover somewhere again around the 30 zone. And if you see, the price to book is still at the lower bound, which is a good value zone to invest. And it went up all the way from 30 to say this zone of 114, 20, 150, where the stock became overvalued as the price to book reached the upper end, and this is hitting the +1 and the +2 standard deviation lines, these two, and the RMI gave multiple sell signals, and after that the stock has been mostly in a sideways zone for the past say 2 years or so. Let us consider another metal company or a commodity company, if you may say, it is Hindalco. So let us again select the strike valuation setup. Just let us switch to 10-year and select weekly over here. So again, if we switch to price to book of Hindalco, we can see that say around mid 2015, the stock was quite undervalued as the price to book was quite low and had reached the -2 standard deviation line. The RMI gave two positive crossovers, once over here and here somewhere in the range of say 75 approx. If someone would have invested at that time, just see within 1 years or 1.5 years time, the price rallied all the way from 77 to 250 odd, which is a say 3x 4x from 3x 3.5x from there. Then sometime around end part of 2017, the price to book again reached the upper part, which is the +1 standard deviation. The RMI again gave multiple sell signals, and at this time it is best to exit from the stock. Again, during the COVID bottom, if you see, the price to book fell to -2 standard deviations over here as the market was overall very cheap at that time. And if you'd have invested using a combination of RMI crossover, which is this one, and looking at the undervalued price to book also, then the stock rallied all the way from say 120 zone and went up till here where the stock first became overvalued somewhere around say 412. So you got a 3x bagger over here all within a period of 2 years, and you could ride the momentum. So if you see, even though the RMI gave a few whipsaws over here, but if you would have combined valuation and RMI, then you'd have got a clearer trend of say a continuous ride of 1.5 or 2 years. Over here again, the stock became overvalued somewhere around end 21 or early part of 22, and RMI was given exit sell signal. After that, if you see, the stock fell all the way from say 600 to 318, and then it again gave a RMI crossover somewhere in say 2022 where the stock hit a low of 350 340 zone. So this is how you can use valuation for say a commodity company. Now let us study some stocks from the auto sector. Let us consider the case of Tata Motors and how it had become quite undervalued at the COVID bottom. So as usual, let us select say look at the past 10 years valuation, and if you see in the big during the top of say 2016 where the stock hit a top of 600 approx, the EV EBITDA was quite high. It was nearing say 8, and it had touched the +1 standard deviation. By the way, just if you look over here at the top part, EV EBITDA and PE is a recommended method for this stock. So if you look at EV EBITDA, it topped out over here in 2017. The RMI also gave a few sell signals over here, and the stock fell all the way from 600 to somewhere around 60 or odd zone during the COVID bottom. If you see during the COVID bottom, the EV EBITDA had reached, say, quite undervalued zone. It remained undervalued for some time. The RMI gave two, or I would say multiple buy signals somewhere around the zone of 150 or 112. If somebody would have invested at these zones, say 100 or 60, 70, and would have held on, then would have at least got to somewhere around 300 or 3, or say 450 within 1 or 2 years. And then if you can see again, the EV EBITDA was quite high over here. So this was not a really a time to invest. And when the EV EBITDA was again coming down, and the RMI gave two multiple positive crossovers over here, you see the stock came out of a long, say 1 year, 1 or 1.5 year sideways range, and has again started moving from 405 to say now 900 zone. And as of now, if you see, the EV EBITDA has still hasn't touched the +1 standard deviation line. The RMI is still giving a positive crossover. So I would say that one can still ride the trend over here, even though, just to give a disclaimer, this is not a trading advice. This is just discussing the setup of valuation and RMI. Coming to say a auto ancillary, let us just study Samvardhana Motherson International, as this is a quite large auto ancillary. Let us see how to invest in this stock also using the recommended method of EV EBITDA. So let us rewind all the way back to 2014, where the valuation was quite low. Sorry, let us rewind back to somewhere around 2015, as the RMI is starting over here. You can see on the bottom left, the valuation is quite low, somewhere just near the -1 standard deviation range. The RMI gave a positive crossover over here, and the stock rallied all the way from 95 to somewhere around 160, 180 odd. From there, if you see, the valuation reached the top end of the zone, hitting the +1 and the +2 standard deviation lines over here. The RMI also gave a negative crossover sometime in early part of 2018, and the stock fell all the way from 152 to somewhere around, say, 40 in the COVID bottom. During the COVID bottom, the valuation again reached an extremely cheap zone over here. The RMI just gave a positive crossover, say in July 20, and the stock rallied all the way from 63 till I think 138, which is a doubler in 1 year. So that's quite good. Again, it gave a negative crossover, and the stock fell all the way from 148 to say 70 odd, where it halved. So this is how you can combine valuation and the RMI to at least do, say, I would say a medium to long term investment horizon, say of 1, 2, or 3 years. Now let us study a few pharma stocks also and see how you can use the RMI and the valuation as an entry exit tool. Let us consider the case of Zydus Life Sciences. As we had seen that we can value cyclical stocks or a pharma stock using market cap sales. And what the recommended measure is over here showing is also market cap sales. So let us study this stock for the past 10 years. In 2014, if you see, the market cap sales was quite cheap as it was very near the -1 standard deviation zone. The RMI gave a positive crossover here, and the stock rallied all the way from say 212 to somewhere around say 365 or 400 zone, where the valuation again became quite overvalued. The RMI was already giving multiple sell signals and the stock fell once from 400 to 300 zone. However, the valuation was not quite cheap over here. It again became cheap during, say, just before COVID or during the COVID crisis, where the valuation once again hit the -2 standard deviation zone. The RMI gave a positive crossover somewhere around, say, I think 220 zone, and it went up all the way from 220 to 600 within a period of just 1 year. As you can see, the market cap sales again became overvalued in this zone where it is hitting the +1 standard deviation line. The RMI again gave a negative sell signal and the stock fell all the way from 600 to say somewhere around 325 zone. Again, the market cap sales turned into a value zone. It was hitting the -1 standard deviation line. The RMI gave a positive crossover over here, and the stock has rallied all the way from say 350 odd to somewhere around 900. However, if you if you look at the valuation over here, right now I would call it quite overvalued, and it is also hitting the upper +2 standard deviation. However, one can still ride the trend as the RMI is still in the buy signal and it has not given a sell signal right now. Let us now consider the case of Dr. Reddy also. So again, if you would have used a combination of say market cap sales as a valuation tool and combine it with RMI, you would see that it was giving a buy signal somewhere around mid 2014 when its price was say 2500. From there, it rallied all the way to say a zone of 3,700, peaked around 4,000, where the valuation was quite high. The RMI gave a negative sales, gave a sell signal in mid 2015, and the stock topped out around 4,000 zone, and it fell all the way to somewhere around 2,000, where the valuation once again remained cheap for say around 6-8 months. The RMI gave you two opportunities to buy and accumulate the stock somewhere around 2000 2500 zone, and from there it went up all the way to say somewhere around 5000 or 4000 zone within a period of just 2 years, where the stock once again became overvalued. If you see, the market cap sales is at the upper bound, hitting the +1 +2 standard deviation lines. The RMI is giving you multiple sell signals telling you that this is not the time to at least buy and one should start booking profits gradually. And right now it is just going towards the overvaluation zone, but still now not really overvalued, and the RMI is still giving a positive sell signal, a positive buy signal. So you can still ride the trend as long as the valuation and RMI are still kind of okay, I would say. Now let us again come back to this slide, and as we had seen over here, the best way to value banking stock was price to book. So let us now consider a few stocks and see how to combine RMI and valuation in the case of banking sector. Let us consider the largest private sector, I mean the one of the largest private sector bank, which is ICICI Bank. So if you see somewhere around mid or end 2014, the RMI gave a sell signal over here. The stock was also bit undervalued, bit overvalued, I would say. The stock fell all the way from 300 and bottomed somewhere around 150, 170 odd, where the stock had become quite undervalued as the price to book was hitting -2 standard deviation somewhere in early part of 2016. where the RMI again gave a positive crossover and the stock bottomed somewhere around 200 and rallied all the way from 200 to somewhere around say 450 odd zone in the next 2 years, where the stock once again became overvalued. The RMI gave a sell signal, and the stock actually would have, if you would have followed this system, you would have exited just before the COVID struck in February. So you would have exited somewhere around January. So this would have saved you from this fall from say it fell all the way from somewhere around 500 zone to around 280 or 300. Again, the stock became undervalued and remained undervalued for 3-4 months during the COVID crisis. The RMI gave you a buy signal, say somewhere around 360 zone, and it would, if you'd have followed this system, it would have at least given you a two bagger till 600, where the stock once again became slightly overvalued. The RMI gave a sell signal, and at least not the entire trend, but you would have captured at least a major part of the trend, and the stock doubled within a period of say just 1 year or within less than 1 year. Now let us come back over here and see that IT sector, FMCG sector, and the AMC sector, which is the mutual fund sector, can be valued using P ratio. So let us consider a few examples from this sector also. So the first one is TCS, which is the largest IT company. So as you can see over here, there are two ways of valuing this stock, which is the recommended measure, market cap sales, and PE. Let us consider PE first. So if you see somewhere around early part of 2017, the stock was quite undervalued over here. The RMI gave you a buy signal. The stock rallied all the way from 1500, 1100 or 1200 zone, and it came to all the way somewhere around say 2200, which is double. Here the RMI gave you a sell signal, and the stock remained sideways for some time. During the COVID bottom, it again became undervalued, where the RMI once again gave you a crossover signal over here, and the stock rallied all the way from 1800 to say somewhere around 3200, 3500 zone, where the stock once again remained overvalued. The RMI gave you 2 or 3 occasions to exit, or I will call it to book your profits, and it remained sideways for some time before the valuation once again started going up. If you switch to market cap sales, then also you can see that it would have given you a good entry and exit point, just like we discussed sometime in early 2017 once more in the COVID bottom. And similarly, it would have given you multiple exit opportunities over here in 2018 when the stock topped out once, and in say mid 2021 when the stock topped out again for some time. Let us consider one stock from the FMCG sector. I think the best one to consider is ITC. So the recommended measure over here is PE and market cap sales. So we can use either one of them. So this coming to sometime in 2017, where the stock topped out for a good time. The stock had topped out around 320 odd levels. If you see, the valuation was quite high during this time, for once in 2017 and again in 2018. The RMI was anyways giving you a sell signal over here, and this was a time where you should not have invested or at least booked out of partially out of this stock. And again in 2018, the RMI and the valuation both gave you a sell signal. Then the valuation turned from overvalued zone to undervalued zone in 2020. And as we know, ITC had remained sideways for some time. It was quite undervalued for say 1 or 1.5 years of the entire first part of the bull market. But this was actually a time to accumulate this stock. As you see, the RMI was giving you multiple buy signals over here, once, twice, thrice. And if somebody would have bought this stock gradually, you see the stock rallied all the way from say 220 odd to 450 zone, doubled within a period of say 1.5 years. And the valuation went from undervalued to overvalued sometime in July 23. And if we all remember, the stock topped out in the zone of 500. And you see that the RMI also gave you a sell signal sometime at the same time. So if somebody was riding the trend and had already doubled his money, this would have given him a good exit opportunity. Coming to the third sector, which can be valued using the PE ratio, let us consider a stock NAM India, which is actually Nippon AMC, and we'll see how we can value this stock also using the PE ratio. As you can see, Strike is showing that the recommended measures for this is the price to book and the PE ratio also. So this stock is actually giving very good cycles and good entry and exit points if you combine both valuation and RMI. So if you just look somewhere around early part of 2019, where the stock became quite undervalued based on the, sorry, just switch to PE ratio. Based on the PE ratio, and the RMI gave you two positive crossovers over here. After spending a few weeks in the undervalued zone, the stock rallied all the way from 170 odd and topped out somewhere around say 350 400 zone, where the stock had become overvalued, and the RMI was also giving you two sell signals right before the COVID crisis. So if you see, it topped out just before COVID struck somewhere around 400 zone. But if you were following this system, it would have already told you twice to exit or at least book partial profits. Again, all the way, the stock became undervalued just 1 year back when it was languishing around 200, 250 zone, and the valuation was also somewhere around -1, -2 standard deviation for a long time. The RMI gave you a positive crossover, and the stock rallied all the way from 230 to somewhere around, right now it's 500, and the stock has just reached an overvaluation zone, and the RMI is also giving you a negative crossover or a sell signal. So basically, for anybody who was following this system and had bought the stock around 230, can is at least say not at least buy fresh or trade according to the system where you should book partial profits. Again, just a disclaimer that this is just discussing the trade setup and this is not a trading advice of any type. Now, after this, let us come to the fourth part, which is a list of undervalued and overvalued sectors. So if you see that there are some undervalued sectors on the left side, which is animal feed, petrochemicals, insurance, logistics, QSR, and staffing companies. And overvalued sectors, there are quite few right now. However, low float mid cap PSU stocks, which have been squeezed due to their lower float, look quite overvalued based on valuation. We'll just consider some examples out of these. So let us start with the first sector, which is the animal feed sector. Let us consider the first stock, which is Avanti Feed. So as you can see over here, right now, the stock is just coming out of an undervaluation zone. The RMI already gave, say, two or three multiple positive crossovers in the range of somewhere around 400 or 350 for 400 zone again over here, and the stock has rallied, say, from 380 or 400 to 500 right now. However, the stock is still somewhere around, I would say, fairly valued, and the RMI is still in a positive crossover zone only. Another undervalued stock from this sector is the Apex Frozen Foods. So if you see, just some time back in January, it gave you a positive crossover, and the stock rallied all the way from 200, I think 270 zone. It is just giving a negative crossover. So I think since the stock is still undervalued, one can say consider an investment in this. No, excuse me, sorry. When the RMI once again gives you a positive crossover after some time. The third stock from this segment is Godrej Agrovet. So this has remained in an undervalued zone for a long time, and the RMI just gave a sell signal a few days back. However, if someone is tracking this stock and this is still undervalued, and as and when the RMI once again gives a positive crossover in some time, this can be again a good stock for investment. The next sector is petrochemicals. So within petrochemicals, the stock I would like to show is Confidence Petrochemical. So if you see over here, the RMI has just given a positive crossover once in November and is just giving another positive crossover right now. The valuation I would call is not really undervalued, but it is fairly valued. It is turning up, and again, this can be a good investment. So the third sector we would see is the insurance sector. The first stock we'll look at is, say, HDFC Life Insurance. So if you see over here, the stock is quite undervalued right now, and is, or I would say it may give a positive crossover after some time. So this can be put on a watch list. The next from this sector is ICICI Life Insurance. Again, the same story. Stock is just near the -1 standard deviation line, is quite undervalued, I would say. And the RMI is just about to give a crossover. I would say this one can also be put on a watch list. And the third and the fourth sector we'll consider is the logistics sector. From the logistics sector, we would consider a stock from the Mahindra Group, which is Mahindra Logistics. So it has been in a downturn for some time, mainly due to two or three acquisitions it made, which haven't been doing well. However, they have started to turn just some time back. And even I think that this stock is also another undervalued stock. So as you can see, the recommended measures are two over here, which is the EV EBITDA and the price to book. So if you see, the EV EBITDA is right now in an undervalued zone, and the RMI has just given a negative crossover. However, this can be put on a, say, tracking list, and as and when the RMI gives another crossover, this can be a good investment. Again, if you look from the price to book value perspective, the same thing, that the stock has been undervalued and sideways for some time, and the RMI is giving you some time to buy or accumulate the stock from an investment perspective. The fifth sector to consider is the QSR, which is the fast food retail chains, or something like, say, a Jubilant Foodworks, if we may consider. So over here, the stock somewhere is in a fair value range based on its historical valuation. Market cap sales has fallen all the way from 14 to 6, and the RMI gave a negative crossover some time back. But if you see the stock is trying to again go up as and when the RMI gives a buy signal, this can again be a good investment based on this current valuation setup. Another stock from this sector is Devyani International, which operates the Pizza Hut chain and the KFC chain. So again, looking at this setup, even though valuation is quite low, I think one can wait for the RMI to give a crossover, may give a crossover in some weeks. And the last sector on our list is the staffing companies, which actually includes companies like, say, Quest Corp. So these companies actually provide temporary contract based manpower to the IT sector and the BFSI sector. If you see, the valuation is still undervalued and the RMI is still in a buy zone. So this can be maybe a good investment. Next stock is Team Lease. So again, if you see, this stock is undervalued and the RMI gave a buy signal some time back, and the stock has rallied somewhat from, say, 2005 500 zone to around 3200 right now. However, the stock still remains undervalued and the RMI is still giving a buy signal over here. Just to reiterate that we are just discussing a valuation setup right now, and please don't construe this as a buy sell call. Now to consider some overvalued stocks. Let us consider the case of Fact, which is a fertilizer company. What has happened over here is in that these low float PSU stocks. So by float we mean that, just see on the bottom right hand side, you will see the shareholding pattern. So the promoters, which is the government of India, actually owns 90%. FII and DII own another 9%, and just 1% or 0.9% is with the public. So because of such a low float and a strong bull market, what has happened is that this stock has become substantially overvalued. Just look at the range right now. The EV EBITDA currently is somewhere around 670. It is in the plus 1 plus 2 standard deviation range, and the RMI on a weekly basis, I think, is already giving multiple sell signals over here. The stock has already rallied all the way from 25 to 800 zone, and at least I don't see any more value in it. Similarly, the next stock we would consider is again, say, IOB, Indian Overseas Bank. So if you look at the bottom right hand zone, the float with the people or the public is just 2.2%, and the majority is with the DIIs. I think it's mainly LIC and the government of India, which owns somewhere around 96%. Coming to valuation based on a price to book perspective, it is, I think, 5, which is double of that of HDFC Bank. If you look at HDFC Bank right now, Even HDFC Bank is trading at a quite low valuation of 2.5 and has gone below the -2 standard deviation range. However, some part of this can be attributed to the merger also. However, if HDFC Bank is trading at say 2.5 book value, I don't see any reason why these banks should trade at say 5 standard deviation, 5 book to value. Another overvalued stock we may consider is IRFC. We all remember how this stock rallied all the way, however, has fell in the past, I think, 1 month or so. Just look at the valuation, how it has gone completely out of sync. IFCI is again a financial company also engaged in the financing of railway projects, railway tenders, and all those things. It is again trading at say I think 4 or 5 price to book and is quite overvalued right now. I really don't see any reason why these companies should trade at such high valuation. So I think that completes the presentation for now, and I'll be happy to take any questions.
Okay, fantastic, Gaurav. Thank you so much. Before we start the Q&A, we request everyone to raise your hands. I mean, whoever is having doubts, we'll allow you to unmute. You can ask your doubts. But first thing is, we are not going to take up any stocks related questions because you can do your own analysis. Let us spend time and let us understand what is the process involved more than anything else. Okay, more than anything else, understanding the process is important. So kindly ask more questions as to about the process and not about a particular stock. Second thing is a disclaimer: whatever stocks we have discussed is not advisory services. Please do your own analysis. It was just discussed from a educational perspective. So, Rohit, are you there now, Rohit?
Yeah, very much.
Yes, absolutely. So, okay, we'll first, Ravi Jagwani, please, you can ask your question. You can unmute.
Yeah. Hi, Gaurav. I just wonder how can we use a strike setup to find out companies which are overvalued or undervalued. Currently, you showed examples. That was the final output. But is there a screener which we can use in strike itself?
So
Or
I
we
think
need to
that is
go on
under.
each and every stock to identify?
Yeah, that's a good question. I think Chavanji can answer that one well.
Sorry?
Chavanji, he's
Chavan,
asking.
a screener for undervalued and overvalued stocks.
Yes, fundamental, yes, undervalued and overvalued, we are bringing up in the fundamental scanners. Okay. Since there's a lot of development going on, we are trying to do our best to make sure that we complete it on time. The second thing is even the sector valuation. So now Gaurav ji discussed about sector valuation. That also is going to come up in the sector module. So right now that sector valuation, undervalued, overvalued is not available, but Gaurav did a lot of homework on individual stocks and that is how he derived to the sector valuation today. But that sector valuation screen will be ready in the next 1 month or so.
Okay. Thank you, Chavan.
Yeah. Suri Sharma.
So, hi Gaurav, I think that's a fantastic presentation to start with, and thanks to the team at. What I want to understand is the standard deviation that you have.
So your voice, sir, please.
Hear me? Can you hear me now?
No, your voice,
No,
for some
your
reason,
voice is very low.
Hello.
it started well, then it dropped off.
Is it okay now? Is it okay now?
No,
Just a minute.
no.
But try to mute and unmute again.
Suri Sharma, you'll have to just figure out your this one audio and then please come back. Mr. Ajay Panchal next.
Yeah, team, a great presentation, a real eye opener. I would say congratulations for that. And my question to Rohit is that when discussing the RMI, there was one example which was shown where when looking at the down trend in the RMI, there were some crossovers below zero which were discarded. That was in the example. So, like the question is that how do we understand that general principle is that if we get a bullish crossover below zero, then it's a buy. But then how do we discard the false signal? Is it by using some higher time frame or some other way by which we could come to that conclusion that this probably is the not correct RMI crossover for a buy in a downtrending stock?
So what I'll try to just show you is the
Is the screen visible, guys?
Yes.
Okay.
I think I was showing you Nifty 50, so I'll use that only as an example. Okay, so this is what I was talking about, and I was talking about this, right? So what I was saying is to discard the sell signals, because the primary sell signal is this one, which is occurring only after the RMI has gone above zero, and then you have a sell. Now, in this case, once you get a sell signal, the next important sell signal is only after the RMI from below comes back above zero, and then you get a sell signal. But what has happened here is you haven't seen it go back above zero over here. So because this did not go above zero, okay, these were discarded. This is essentially the noise. And this previous sell signal is considered to be ongoing. Is that clear?
What I was looking was is that here a few buy signals are also coming in this whipsaw, but how do we ignore them and consider the one after March as the real buy?
Okay. Yes. No. So there, of course, it's because now I'm saying it's an up-down market, but you are right that it can be overlaid from a weekly chart also. But also the other thing is what I mentioned is that throughout this time frame, prices were below the average over here. So which is why what has not happened is that what are we really thinking about? Are we thinking about going long or are we thinking about going short? So this short signal, okay, it was ongoing. What happened is once you've gone there, do we consider the next buy signal? This is what your question is. Should I consider this as a buy? Uh, so sometimes see if your overall view is positive, you may consider it. Okay, otherwise you would probably want to discard it, and the weekly can be helpful in that regard. At that point of time, if the higher time frame is in sell, that is the only filtration where you can remove it. So if I take the weekly time frame, you will find that over here it is in sell.
Right. Okay, so the higher time frame always helps to confirm a buy signal or a sell signal.
Yeah, which side you should give more importance to.
Right. Okay. Got it. Thanks for the great answer, Rohit. Clarifies quite a bit of doubts.
Thank you.
Hello.
Yeah.
Hi.
Hi.
I tried to plot strike valuation setup, and it only plots for 1 year only.
Hmm?
You have to change
No,
the
we can. You have to change the option to 10 years over there. Sir, if
Okay,
you can show me.
okay. All right. Yeah, good. Okay.
Yeah.
All right. Thank you.
Okay. One more question, Rohit. What I was getting was when do we use 1 year, 5 years, 10 years in valuation setup? If you can share your screen. Rohit?
Yeah.
Yeah.
See, the choice of 1 year, 2 year is essentially based, or you mean on the
On
valuation
the
setup?
valuation setup, strike valuation setup.
Hmm.
You can go to charts. Yeah. So here is the time frame to change: 1 year, 3 year, 5 year, 10 year.
Yeah.
So 1 year is something for very, very low, very short term.
Yeah. So
You
what we've
know,
also done is that when someone chooses 1 year, we are plotting the daily RMI. So you're actually looking at shorter term buy sell signals, which last for approximately 3 to 4 weeks at a time. Okay. And so each cycle has that time frame. So if you're looking at, only getting the near term entry, exit, then you probably use the 1 year. Moment you will go to a 3 year, you'll find that it switches to weekly over here. So it pushes you to look at a slightly higher time frame, which means weekly cycles that can last for several months. So this buy signal would be from July, went on till December of that year. Okay, before it gave a sell again. So what you're really doing is changing the time frame also of the analysis and the holding period. Now, when you go to 5 years, we are switching it. We are still keeping it in weekly. But if you go to 10 year, you will find it switch automatically to monthly. So that then means that okay, you're willing to hold on for several years.
okay. Thank you. Next up is Mr. Saha, Arun Saha. You can unmute.
Thanks, Gaurav. It's a nice presentation.
Thank you.
Actually, I have one question that regarding this undervalued stock. Actually, how do we basically understand whether these undervalued stocks health is good from the strike or all the parameters?
Okay. So how to
That we will
understand
be enough for it.
health is good? So the first and foremost check for any company is its management underlying corporate governance. That's the most important one. So like we had discussed several undervalued stocks, if I recall, I within the first sector in the animal feed, I had say selected Godrej Agrovet. We all know it is from the Godrej group. It's a good company, good group. In the insurance sector, I had described HDFC and ICICI. We all know it's a good, healthy company. Logistics, Mahindra is also good. Now, coming to strike, how to understand what is the situation of a particular company. So somewhere, let us select Mahindra Logistics only.
Gaurav, you have to share your screen, please.
Oh, okay, sorry. Yeah. The first part is also always the management and the underlying corporate governance. Having said that, let us come to something like Mahindra Logistics. So this actually gives you an overview of its fundamentals. Say operating cash, this gives you a cash flow. So whenever you are investing, please look at operating cash flows and compare it with profits. So what I mean is just come to the annual PL, look at the profits over here, which is the PAT, and compare it with the operating cash flows. This actually determines कि the profit you are earning, is it actually getting converted into cash. मतलब कि प्रॉफिट तो बुक हो रहा है बुक्स में, लेकिन बैंक में और कैश में पैसा आ रहा है या सब फर्जी है. This is will actually help you determine this. So let us see that the past 3 or 4 years, it has made a profit of say 55, 30, just add it up, 85, and say another 35 would bring you to 120, and another 27 would bring you to 147, somewhere around 150 total. Let us now switch to cash flow over here, and let us add the past 4 years operating cash flow. So first year is 95, and 85 would bring you to 190, 180 odd, another 300 and 200. So we have easily crossed the sum of profits. So basically what you need to do is you need to add the past 3 or 4 years profit after tax and compare it with the aggregate of the operating cash flows. So this is the first check for any company. This is the second check for any company. First is the management quality. Second is कि profit तो कमा रहा है but वो convert हो रहा है cash में या नहीं. Then you can come to various financial ratios and say something then look at something like receivable days. The receivable days should not be increasing, it should be coming down. So somewhere over here it is coming down, say 55, 54, 42. It is within control. Looking at working capital days, this should also be coming down. So say somewhere from 26 it went up to 32, but has again come down to 16 and this time has gone negative, so which is a very good thing. This shows the working efficiency of any company. And obviously we know that debt shouldn't be too high, debt should remain under control, and these are the basic checks you can perform. So the first one is the management, second is the cash flow check, third is the checking of efficiency by looking at receivable days, payable days, working capital days, and the fourth is looking at if the leverage is under control. If that is okay, the company will survive or should survive and come out of a downturn. And if you invest in a downturn, when the upturn starts, you will get good profits. I hope this answers your question.
Yeah. Thank you. Bye.
Okay, next up is Mr. Sanjay Arora.
Yeah, good noon, sir. I just want to know 2-3 things. One is this RMI indicator is also available on Sher Khan. So since you were there and from those days I have been following you, is it the same indicator or here it is different?
Yeah, it is the same.
Okay. And secondly, on strike, do you have any quarterly plan also? Because I saw monthly and annual. So
no, there is a 6 months plan also.
It is 6 months, not quarterly.
Yeah. No.
Okay, sir. Thank you.
Thank you. Next up is Jayesh Patel.
Good afternoon, sir. Sir, can you show me the stepwise procedure how to plot that stock chart, RMI chart, and that valuation chart, all the three together on the screen? On the strike.
Okay, Gauravji, just show him how to just any of your stock, you just type in the search, okay, at the top search. Okay, say like
you want to select, say, Reliance Industries.
Okay.
So just type over here Reliance. Just select this by clicking over here. Then come to charts.
Okay.
Then over here, you will see the Rohit setup, which Rohit sir just discussed about the RMI. Okay. And if you just come to chart over here, again select strike valuation setup. The valuation setup will open. You can select the time period over here, 5, 10, 3, whatever be it, monthly, daily or weekly, based on the time frame.
Okay.
Yeah.
One more thing, sir. I'm a great admirer of Rohit sir, and I learned so many things from him. And thank you very much to Rohit sir and Chavan sir, both.
Yeah.
Thank you.
Thank you, Jayesh. Thank you. Thank you. Okay, next up is Arvind Singhal.
Yeah, thank you, Rohit. Thank you, Gaurav. It was very interesting. In fact, I would say this is a very, very useful tool I would like to use. So I have not used any indicators, even the general ones which are available. So my first question is to Gaurav, when you select any stock, like just now you selected Reliance. So there is a chart on the top, then RMI, and then below that is also TI chart.
Sorry, which chart?
That trend, what is that called? There are 3 charts which come.
Yeah, interactive, Rohit setup and strike, yes.
So the bottom chart also comes automatically in all these 3 charts come for all the shares?
Yeah.
All the stocks?
Yes, it will come for all the shares.
Okay. And I have taken 2 years membership. do I have to buy strike in addition to that?
Sir, you can, I mean,
You're saying
see,
insider
regarding the
subscription.
insider club subscription, is it?
So 2 year subscription I have taken.
Of insiders.
Or insiders, probably, yes.
Yeah. This is
Strike
strike,
is
sir.
different. Strike you will have
is
to take
different.
separately.
Okay.
Yeah.
Okay.
Rohit,
And
if you can
what-
just show them how to subscribe
Okay.
once. Yeah. Just go to web.strike.money. This is where the tool is. Whoever is listening to this, web.strike.money. And then you can, this is the dashboard. You can just create an account. And then you can subscribe by clicking on the My Profile section and then go to Plans and Billings. Yeah.
Okay.
Yes, Arvindji.
So now, can't it be done through app, Indiacharts?
No, we
app?
don't have a, no, we don't.
Strike is a separate platform.
Strike is a separate platform.
So it's not on app because, it's so data heavy. As you can see, there are a lot of charts and data.
Okay.
Therefore, we have not put it on a mobile phone.
Okay.
It works.
It's very difficult to put it on a
desktop
mobile
or
app.
laptop.
Okay.
Yeah.
Now, my next question is that last webinar, which was organized by Jay, where he mentioned that its overheated market is overheated and it can make a top of 22,125 or something, which is coming closer. And if I see RMI of Nifty, it is still showing bullish trend because RMI indicator has breached from the bottom, what Rohit has shown, if we come towards the end. So how do you, so this one, so if you expand, you see the green line is top and the red line is crossing from the bottom.
Yes.
Which shows that it is a bullish indicator.
Yeah.
So how do you analyze or say that you are coming close to the top until there is a breach of RMI indicator from top to bottom, right?
Yeah. So this is a very, very good question, and that you asked it, and even for the broader audience that comes here, and I try to explain it in Insiders in my weekend also, that the two things that we differentiate from, see, when in Insiders we are writing, we are not just looking at RMI. I'm looking at the Elliott wave counts. I'm looking at macro factors. I'm looking at many things when we're trying to determine whether we should be looking at a topping out market. So then we are actually drawing a line and we are saying, okay, what if this develops into an ending structure? The second alternate is, okay, if it does form an expanded flat, can it go higher? We have not even started discussing that yet. Okay. But here is the catch. This is what I say every time people say, "Arey sir, ye nahi ho raha hai. My trade went wrong." The thing is that 100% of trades never go right. So it's usually a 70-30 where 70% is right and 30% is wrong. And what even within that, the way that trades need to be managed or investments need to be managed, even in investing, the suggested logic is position sizing. Now, what we mean by position sizing is that I can have a view, but how am I going to execute that view? So that is where technical indicators come into focus. So I can look at wave analysis, I can look at macro, I can say, okay, this looks like the market should top out, but I don't have a sell signal. So that means I cannot have a position right now on the sell side. I may have a position on the long side if I take that view to go with the RMI. Okay. But if I have a bullish bearish divergence, say for example, weekly RMI, what you may not have noticed, the weekly RMI actually crossed to sell this week. Okay, so when this weekly is going into sell and my daily is going into buy, I will reduce the weightage of my long trade also. So if I'm say normally if I trade 1,000 shares long, I will say, okay, this time because I have a divergence, I may not do 1,000, I may do only 500 or I may do only 200. By reducing the quantity, I can actually be taking less risk on the direction of the signal. Second is that when I have to actually wait for the next sell signal to actually start developing a short trade. So I can have a view that it is topping out, but the RMI is telling me don't take the trade yet. So for that, then I will combine what I mentioned in the beginning. Now, if I want to take a trade on the sell side on the daily time frame, can I combine it with the hourly time frame? So I may find that the hourly sometimes gives me a sell, then the daily is still in buy. So that helps me decide the position. So around, if I use 3, 4 indicators, I'm using a moving average. I can put 20% weightage to everything. I can say 20% weightage to the RMI, 20% weightage to the moving average, 20% weightage to the lower time frame. And that way, then for 1,000 shares, I will do 200, 200, 200, 200, and position size. That is the way it will execute. So between the view and the RMI, if there is a conflict, and definitely the RMI is telling me don't take the trade yet, wait for the sell signal to come.
So you mean to say that it is in risky zone until it crosses all-time high of 22,125 or so. We have to be looking at our position sizing, as well as we have to be little careful on the buy side.
Yeah, that is the view that I have been putting out. Yes.
Okay. And Rohit, what happens if it closes next week on closing basis, or if doesn't close? Two questions. If it crosses all-time high but closes below all-time high, or second option, if it closes above all-time high, then what will be the view?
Yeah, no. So see again, today's session is more to tell people about the use of RMI. So when it comes to view and when it comes to execution, there's a lot more in between. The thing is, if it is in buy mode, first of all, could I take a long trade also in the short term? Like I said, I could do a lower position size. Now, till I don't get a sell trade, it is still bullish in terms of trend reading. Now, how far up can it go is a different question. Now, there I will then have to go beyond RMI to answer that. I will have to put in a channel, because the RMI doesn't give you target. See, I mentioned this in the beginning. When I'm doing an RMI based system, I am saying buy as long as the trend is long, stay with the long as the trend is down, stay with the short. Now, okay, what we try to do in Elliott wave analysis and other techniques is also we try to take a target. So say, for example, now I've done something like drawing a channel. So if it does go beyond, say, the previous highs, then my next objective becomes the top end of the channel, which is closer to around 22,450 to 22,500. And if I do a Fibonacci reverse retracement, 138% is around 22,520. So all those levels open up once you close at a new high. But again, it's not that necessarily you will go to all those levels, because anywhere where the RMI will turn from up to down, I will again have to, reverse over there. That is the view I'll have to take.
Okay. So my last question is that since I understood and I really liked this presentation and it looks simple to me, so how much percentage surety is just to follow the trend and follow this RMI? Because
How much surety?
I do not have knowledge about Elliott waves or what you talked about. So if I follow only RMI,
yeah,
what is the possibility or probability that I will still continue with my investment into it?
So you are saying that I don't even plot a moving average and I blindly just buy and sell on the RMI?
Yes.
That is not recommended.
Okay.
So I have explained to you that there is an entire way of entering and exiting. The RMI does give you an entry point. Okay, but then what is your exit point? So if you are thinking of entry and not thinking about exit properly, and I have explained that while taking the exit, sometimes the RMI sell signal can give false signals. So then I will use a trend line or a moving average. If you are not learning to use a trend line and moving average in combination with RMI, your performance could be slightly poorer. If you do combine it and use it, then I think you will get above average performance. But it's very important to build an execution process. Okay, at what point will I make an entry, and how will I hold on to it, and how will I exit? Once you put that plan in place, then it works for you. I mean, I'm doing this. I created the RMI indicator in 1996, and I made it slightly smoother in 1999. 1999, and we are in 2024. That's 25 years of not having changed the formula at all. And this is what I've used. This is what my teams under me have used for this entire time period. And they're all very happy with it. That is what I can tell you. So that is a starting point for you to consider it. If you're looking for the holy grail, which is 100% right, it doesn't exist, right? So I cannot tell you that this will work 100% of the time. There is no such thing. Nothing works 100% of the time.
True.
It work better than everything else that you have used till today? Yes.
Okay. So it is very clear that I have to go through the comprehensive training program. It is not just RMI, and I look
So there is
forward.
always a combination. See, today's session was essentially about valuation plus RMI. So notice that when I'm saying you're asking me about a pure Nifty trade, we were talking about investing. Now there is a very two different things.
Right.
So if I'm purely trading, I'm trying to say, okay, let me use the RMI, but for an exit, I'll also want to use 2 time frame RMI. So I will put, that's why my chart has something known as Rohit Setup, which has a Bollinger Band and a moving average. So it means at least learn about 3 tools, 3 things which are on the screen. That will improve things better, right? If you use a moving average along with the RMI, that will significantly improve your outcome. But if you want to use it for investing, then you will look at valuation plus RMI. That is what we were trying to explain today. That then you have overlaid something else. Instead of overlaying a moving average or something, you're saying, fine, if the valuation is low and the RMI is giving me a buy signal on the monthly chart, I might as well make one entry. Okay. And if it whipsaws also and gives you a second buy because it is extremely oversold on valuation, I can make a second entry as well. Usually, you may not need to make more than 2 entries in a good stock. So in 2 or 3 entries, you would have sort of made a good investment at a low valuation in that particular stock. And using momentum helps you in making sure that you waited for the entire downtrend before buying, and not that, bhao gir raha hai, maine khareed liya. No, the RMI didn't tell you to buy yet. So that was the point of today's presentation, that when you use RMI in combination with valuation, then you don't need to use the other tools necessarily.
Okay.
Okay, but if you tell me, no, not valuation, tell me how to trade Nifty, then I have to give you a different class.
Understood.
Okay.
Thank you so much, Rohit. I would like to interact with Chavan maybe later to take this discussion forward.
Sure.
Sure, Arunji. You can call me up on the number I'm just putting in the chat to everyone.
Okay.
Yeah.
Okay.
This is my number. You can call me up. Not right away. Let this webinar get over, please.
No.
Okay. Yeah.
Okay.
Thank you.
Thank you.
Okay. Next up is Rinku Agarwal.
Sir, thank you very much for this wonderful session. My 2 questions are there, sir. One question is for how to, valuation of these indexes, basically Nifty, Bank Nifty, small cap, mid cap. So what is the way of valuation of those indexes? And second one is, sir, how to join this insider club? Can you share some details on that part?
Okay. Yeah. For Nifty 50 for
thoughts
all.
on this, Gaurav? What should we look in an index?
So, sir, if your screen is already visible and you are already sharing the P valuation, so for any index, you can look at a combination of P and PB.
Okay.
Just look at both and combine both to arrive at a decision. And regarding Insiders Club, Chavanji, Rohitji can answer.
Yeah. So this is a fair outcome because, see, many times PE can be high, but price to book, I think even in 21, 22 was actually not even above 1 standard deviation. So price to book this time has not gone to an extreme level. It only rose, I think, here at the end of July 23 is where it is high. After that, we actually seeing the data drop because I think in September, the price to book ratio also has been adjusted for consolidated. Earlier, PE ratio was adjusted for consolidated in March of 2021. And this time what they have done is the price to book has been adjusted for valuation. So when you look at the shorter term chart, okay, for price to book, then you actually see this very sharp drop over here. Even though the market is at a new high, this sharp drop over here, which is occurring, I think, on the 29th of September in the price to book value is because of making that based on consolidated profit rather than on, and I don't know how, so see, price is price. Book value doesn't change on, so basically consolidated book value में भी इतना फर्क आ गया है.
Sir, is it because of HDFC merger? Might be.
No. This is a exchange adjustment for consolidated. So they would have taken book value on a consolidated basis, is what I understand. I think there is a filing. You can find it on the NSE site. They have
Okay.
mentioned it. This is the date, 29th onwards, they have changed the calculation. The problem is that when they are changing calculation, they are not giving us backdated data. So you're not really now no more able to compare the current data with the
Right.
past data. That is the
Right.
problem with the exchange.
Right.
Yeah. Okay. And regarding Insider Club, please do call us after this webinar because we are short of time. There's a lot many people who are asking doubts. Anyways, just go to indiacharts.com and you can subscribe over there. Okay. You can just
Sure.
go to Insider Club and you can find it out. Okay.
Sure.
Yeah.
Thank you.
Thank you. Next up is Suri Sharma.
Hi, I hope you can hear me this time.
Yeah.
Great. So as I said, wonderful piece of work, and I have known Rohit ji for quite a long time, though we have met on the sidelines of many events. So Rohit ji, one question for you is that, like in a typical bull market or a bear market, we see RSIs being above 80 for a very long time or below 20 for a very long time. Similarly, valuations in a bull market can be very high for a very long time.
Yes.
Especially if you look at how do we trade these cycles, because if we purely go by valuations, I don't think that would be the right metric, right? So
Yes.
how can you guide us how you can
That is
one
what the
should approach?
entire session today was about. But if it didn't come across clearly, I will very quickly explain it. See, moment you take any stock, we go to the chart section, and when we open the strike valuation setup, what we have done is we have given you a chart of the long-term RMI and valuation together. The reason is
Right,
very
right.
simple, that if the valuation is getting stretched beyond a point, okay, and you find prices are going up, where is the exit? So the exit is basically based on momentum setup.
Okay,
So because valuation can keep going on, but you don't have a sell signal,
right,
right? So even if valuation is high, if we don't get a trend reversal either on that time frame by breaking maybe the 20-month average
right,
and the RMI going into sell, I
right,
really don't have a sell signal. So that is where the idea would be that even if it's a high valuation, we must wait for a reversal on the momentum on, say, the monthly chart. For a very long term investor, I would say monthly chart.
right. I got it. Okay, thanks so much. And another request to the team is that, I'll be more than glad, to have a paid in-person session, if you can have a seminar or something for strike subscriber or something. I mean, meeting you all would be a great thing after COVID, if something can be done in Mumbai, I would really want to,
Okay,
put
in
that
the
idea
form of
through.
an event, you're saying a local event.
Yeah, a local event, meeting in person. I think somehow the energy of meeting people is very different. So I think outside of these webinars, or at least if you have a schedule even once a year or once in 6 months, and it can be a paid event. I'm not saying it's a pro bono,
Yeah,
but
of course, we
it
have to meet the expenses.
absolutely. But
That's
it will
all.
be a good opportunity for thinkers, like-minded people to come together, share ideas, share thoughts. I think that is one request I wanted to make to you and Chavanji.
Yeah. No,
Since there
about
is a
time, I
close.
think we've developed a lot of tools. About time we do an event. We will do one. We will do
Sure.
one.
Yeah. Sure. Thank you. Thank you, sir. Yeah. Next up is Narendra Singh.
Yeah, good morning, team. Great presentation. I learned a lot regarding the concept of valuations in the stock market. So I have two questions basically. The first question is that I have observed from my experience that there are some stocks which basically does not do price-wise correction, even if they are expensive, right? Maybe their fundamentals are really strong or something like that. So they go through time-wise correction most of the time. Like, for example, like we can take a DMart. So in these kind of stocks, this indicator will stay above its its usual level, means it will go into the consolidation zone. So how to handle these kind of stocks with the help of these tools, stocks which refuse to go into price wise, but they will stay at a high level, but go through a time wise correction.
So even in a time-wise correction, what will happen is valuations will tend to move from the top end to the bottom end of the range, depending on the time frame involved. Like here, if I'm taking a 1 year time frame, they have gone from one standard deviation plus to minus. Now, if I take a higher time frame, yes, it may not appear so immediately, but over time, you see here, this is a 5 year time frame. You are at the top end of this range, and this is based on what have we taken as the key metric? I think market is this market cap by sales?
Yes.
You know? So yeah, market cap by sales has actually pulled down from 12 times to almost 5 times. So it's close to going below the one standard deviation line, which was the last time it was here. So you are right. So in this case, there's a price consolidation at a much higher level, and the valuation correction has taken place. So for what this does is, for a new entrant in the stock, it gives them the right timing and opportunity that yes, now if you are down here, the next time I get a buy signal on the RMI on this particular time frame, which is in this case, I think we have taken weekly, 5 year would be on weekly. So if on weekly you get a buy signal, you may be interested in entering. Right now, it is not yet generated a buy signal. And so it's still in the waiting zone.
Okay.
Now you may say that, okay, but as an investor, why should I sell this stock just because it is at the top end of the range? It may just consolidate and rally again. Now, if you're okay with a 2 year, 3 year holding period where, prices just consolidate, there is actually no problem. If you're an active investor manager, you may reduce, increase positions, you may want to diversify. Those are decisions that you're able to take when you reach that point here. Okay, let me reduce this and buy something else. For the time being, I'll come back to this. But of course, that has a tax angle to it. So it's a decision that everyone takes differently, because sometimes we do get corrections which end up being steeper, sometimes they are not. And from the top end of this, it's around 5,000 rupees at the top end. Okay, here this sell signal came by the time it was still at around, say, 4,800. At the bottom end, it is 3,300. Now, if a drop from 48 to 33 is small to you, then yes, you can very much be ignorant of it.
Okay. My second question is, sometimes in some sectors, maybe let's take example of PSUs, they might be showing expensive on these indicators, but sometimes the analysts and some people say that there might be PE re-rating occurring in that sector, maybe because there is a huge order inflow, their execution efficiencies are improving on ground level. So how to take into account those kind of scenarios? For example, on indicators, they are expensive, but because they are getting re-rated and their efficiencies are improving really fast, they are getting new projects. So in those kind of scenarios, what should we look into? For example, let's take example of Bale. So in initially they were having some problems. They were having problem executing the projects, but now on ground level they are improving the execution. They are getting new projects. Similar with the other PSU companies as well. So means how to take into account these. Means charts are saying they are expensive right now, but maybe on ground they are doing something more efficiently. So market should give them new valuation, something like the new PE levels.
Exactly why then price momentum might not break down on a very high time frame. You might not see a BHEL break the 40-week average, for example. You might not see its, RMI going to sell on a monthly or a quarterly chart that easily. So the logic will be the same, that if it is that strong, then it will probably not break down.
Okay.
Beyond the point.
And also, if to add, Rohit sir, so valuation is say a combination of four factors. First and most important is the management. Number two, growth. Number three, cash flows. And number four is the efficiency, or the say ROE, ROCE, and how efficiently you are managing the business. So if your growth is going up, if your say cash flows are going up, obviously the valuation range will shift higher. So there is always derating and re-rating, and you will have to adjust your range accordingly.
Okay. Thank you. Thanks, team, for clearing the doubts. Great session.
If you really want to do one-on-one, you will also look at the growth numbers. I mean, the data is there right now on the screen. We've only tried to discuss valuation plus RMI, but if you go into the fundamental screens on Strike, you'll find all the growth data, right? These are the results. These are the balance sheet. You can actually see if the numbers are expanding or not for that particular stock. Like you mentioned, BHEL, I'm also waiting to see whether their numbers expand, because so far they are still showing a loss on the annual numbers. So there has actually been no number improvement despite all the talk of something changing. So that's something you have to watch out for and make that judgment.
So it's like a startup now, sir. Revenue going up, loss going up, valuation also going up.
Okay, next up is Jai Patel.
Morning.
Morning.
Yeah. So I don't know exactly what is the the objective of this webinar, but would it be was it just the introduction of this tool and a set of strategy to trade, or if it was not, then the lot of things that are coming out through discussions or question Q&A.
No, the objective was to show you how to use the valuation charts, which are now combined with RMI, because when the first time we did the valuation charts, we had not introduced them along with the long-term RMI. We had only talked about it. Now that it is introduced, we thought it was worth doing this webinar again, since these charts are now part of the Strike platform, and you can actually see how to find turning points in the long term, as an investor, using the Strike platform.
So Rohit, broadly, we got that concept very clearly through this webinar. I mean, the effort was well worth that. But would there be a possibility of getting a comprehensive set of rules or caveats and exceptions which comes out through our discussion?
Yeah, so see, this session alone, I mean, like you said, there are in real-time data, there are a lot of variations. Just like somebody was asking me about Nifty, he started asking, what if this happens? What if that happens? Now, the more granular you will go, you are going to need more in-depth training on how to do something. For people who have a fair mind, see, the simple methods also work. It's not that you need to overgrind on it. If you make it simple, say for example, I mentioned 2 entries, right? If you are a long-term investor, you can buy once, you can buy twice. Then on an that is undervalued stock, you can definitely buy the monthly RMI once or twice. Usually, I don't think it takes more than 2 buy signals in a good stock to really complete entry. So you bought 1,000 shares once, you bought 1,000 shares twice, your job is usually done. And the same is on an exit, that if you keep exiting the every sell signal 500 shares, and eventually put your last sell on, say, a 40-day average, your job is done. So it's actually that simple. But now if one wants to go deeper into nuances and discuss variations, they're definitely not possible in a single session. Then I would push you to go and come and join us in the mentorship training, where we go through each and every aspect of RMI and variations in price, behavior, and so on.
Yeah.
May help
So I
you.
consider, I'm just interrupting. I considered that option as well, and I was in inquiry with Chavan also 2 months back towards the end of December. So that format may or may not work for everyone, Rohit, and we are trying to learn in bits and pieces through all these free webinars. And
I will ask you why that format doesn't work for you.
Okay, I'm coming to that, Rohit. So
I want to know the critique, so then I can either answer it or I can improve on it. And I hope the answer is not pricing, because that is the silliest answer I can get. I'm sorry to say. But the amount of knowledge we share, I think I do an MBA in stock market when we do our mentorship program only once a year. And I think in that sense, we significantly underprice it. So somebody says, मुझे पूरा ज्ञान चाहिए, but ये भाव ज़्यादा है. मैं बोलूँगा ये भाव तो बहुत कम है, but आपको ज्ञान नहीं चाहिए. So shortcut के लिए, then there is, I don't know what else. So please tell me, I want to know what is the why you thought it doesn't fit your requirement.
Jay?
He didn't.
Sir, am I?
He maybe didn't. He didn't like my response anyway. It's okay.
Okay. Anant.
Hi, Rohit and Gaurav. My question is that it was a very nice presentation, and one thing which I wanted to know was the relative strength is what I use quite a lot when I'm trading. So, for example, you talked about the sectors. Some of them are undervalued and overvalued. So, I was wondering whether in this particular chart layout which you have made for valuation, where you put the price of the stock, then you put the RMI, and the last is of course the relevant ratio, like it might be PB or PE ratio or whatever. Can you also add a sector relative strength chart, like whether the particular stock is underperforming the sector? For example, let's say we are taking maybe Reliance, and Reliance is a diversified. So what are the relevant sector it is, petrochemicals. So we can have something like a ratio chart, which you already have in your other drop down menu, where we can, adjust the ratios. We can say small cap to Nifty or small cap to CNX 500, something like that. So can that be made a part of the format? So we also know whether that particular stock is underperforming the sector or outperforming the sector.
We'll definitely think about it, Anant. Okay.
I mean, it can be good for a lot of people, because
Yes. See, right
sometimes the
now,
sector is
yes, I
outperforming.
understand. Yeah. So what you can do is you can just go to the help section and raise a ticket over there, so that it will be in the database and we'll also not forget. But right now, we are not taking up any additional requirement because we are still yet to develop sector analysis, and we are just going live with RRG, which is the relative
I know
rotation
it will
graphs.
be, yeah.
So
I mean, RRG also helps in finding out, say,
yes, so
if it is
we,
going from, say,
yeah,
weakening to improving, then we can think
correct.
of it as a
Yes.
potential sector.
And moreover, we have around 800 tickets which has to be addressed. 800 tickets.
I understand.
Okay. And in that 800, there are around 600 people who are asking for various things. So, I need to have a 500 team developer to address every requirement.
I
Okay.
understand, yeah.
And the pricing what we are giving is at such a low cost that I cannot afford. So it will take time. It will mature over a period of time. But we are right now with a very limited team. We are trying to do our best, and we are trying to build whatever is best. But definitely, just put it in the help section.
The reason why I asked this question was because Gaurav, in the end, he gave those two sectors which are
Yes,
overvalued
that
and
sector
sector.
analysis and RRG is something we have taken up right now. We are doing it.
Okay.
Yeah.
Okay, so even
By
if
March
that
end,
sector
by
is,
March end, you can expect sector analysis. March end or April first week.
yeah.
RRG is something you can expect this month end or maximum by March first week.
Okay, so even if the sector analysis is there, then I can always look at the analysis. I can see which are the
See,
undervalued
sector
sectors.
analysis is a very, very
Yeah.
big module what we are developing. Okay, it's a huge module where you can expect you cannot even imagine what we are trying to do over there.
Okay.
We are going to make sure that you come down to that last 2 to 3 sectors which is highly overvalued or undervalued. That is what we are trying to achieve. So please wait for sector analysis. We'll definitely do it. Right?
Okay. Okay. Thank you. Thank you very much, John and Rohit and
Yeah.
Gaurav.
Okay. Okay. Next up, we are running short of time. So guys, just quickly, Hemant Jagtap.
Hello.
Yes.
Sir, I have doubt with Rohit sir.
Yeah, please.
Sir, Chauhan, Gaurav sir, can you put chart of Nifty daily basis?
You want Rohit ji to answer or you?
Yeah, I want answer from Rohit sir.
Okay.
Valuation.
Yeah, you keep the momentum indicator.
Yes, please ask.
Just go. Yeah, go back up 19 December. Yeah, this is 19 December. Yeah, this one. Sir, in this setup, see the sharp fall came from top, and 19 December, your Rohit momentum indicator gives sell signal. Then after maybe on 20 December, it shoot up from bottom to top. Still, your indicator have the sell signal continuously.
Yeah.
How to read this one?
Yes. So I explained in the beginning, and someone else also asked me this question earlier, is that the overlays, we look at the weekly time frame, right? If we look at two time frames, the weekly time frame is bullish throughout this phase, which means that the sell signals can sometimes be ignored. Also, which means I don't want to trade the sell side. Definitely, what you will be looking for is, okay, is there an exit then? The exit then ideally is either done on a trend line or a moving average. If I was able to draw a trend line for this phase, okay, or if I look at the 20-day average, which comes with the Bollinger Band that has broken, this is the average that only broke over here at this point. So that in combination with this being in sell is then a better exit point. Okay, the entry point is clear. Entry point is immediate. Why is it immediate? Because the larger trend is up.
Your key point is in bullish market, don't trade in short side, right?
Correct.
Yeah.
You try to ride the long side as far as it can go.
I got it. Thank you.
Yeah, next up is Abhijit Ghosh. Abhijit Ghosh.
Yeah, am I audible?
Yeah.
Yeah, thank you, Gaurav and Rohit sir, for a beautiful presentation. I have got one doubt. For the good companies who are undergoing capex, how do I know that the funds that they have earmarked for the capex are being utilized efficiently?
So that's how I explained earlier, that you must look at the total sum of the profit and compare it with the cash flows. So if funds are being used efficiently for capex, what will happen? Will that be that depreciation will be quite high, and optically the profit would look quite low based on accounting measure. However, the cash flow would be very high. This is one way of looking at it.
Gaurav, there is one doubt in it. Say, earlier I was looking at EBITDA to know, because that is prior to interest portion. In case there is any capex, most of the companies, they take loan. So
Yes.
once they are taking loan, they are creating debt, then that debt to equity ratio, that is going, that is increasing.
Yeah,
So
should remain under control, should not increase beyond the point. Else, what will happen is, if a downturn comes, that company will get crushed. This is what happened with so many infra companies in the downturn of, say, post 2010-11, when a downturn came in real estate and infra. Most debt-laden infra companies went bankrupt.
Okay,
So
I
debt.
understand that part, Gaurav. The thing is that there are few capital goods company, like we were speaking about DHL, like SAIL itself. These are capital intensive units. So when they are going in for capacity expansion, say somewhere around 55, 60,000, 80,000 crores is being spent. So that debt is so huge that debt to equity ratio that gets skewed. Now, I want to know whether this capital goods company, whatever debt they have taken, it is being utilized, and what are the tools available to me so that I can know, the things are in the right direction. It is not going to collapse.
Good. So what I'll do, I'll just share my screen. Just a minute. So you talked about SAIL. So let
Yeah.
us consider the first example of SAIL itself. You told that they are doing a lot of capacity
Yeah,
addition.
but presently
Okay.
not. That was somewhere
So,
around 2008. They had a huge capacity expansion.
yeah. So we'll consider the most recent example. If you can see my screen,
Yeah, I'm
you can
seeing.
look at the property, plant, and equipment under the total fixed assets. So
Okay.
just around 2019, if you see from 60, it went up to 67. Right now it is 72.
Yeah.
So basically, they've added around 15,000 CR of plant and equipment. That's a huge amount.
Yes.
Ideally, leverage should be going up. If you just
Mm.
come at the financial ratio section, choose leverage, just see that it has actually come down. Just see the total debt to equity is 1.23, it has come down to 0.47. The reason is why they earned a lot during the steel upcycle. I think because commodity prices went up a lot, they used those internal cash flows, internal accruals to fund this growth. So all capex need not be funded by debt only, it can be funded by internal accruals.
Okay.
That is one thing. Number two, now if you just look at the cash flow sum, let us
Mm.
see that also. So let us look at, say, something like past 4 years. So this is 2, 5.5, something like say 18, 18, and say 20. Let us this approx 20. Okay.
Okay.
So past 4 years is somewhere approx 20. Let us look at the cash flows now from operating. Just look at the cash flows. First year it is 0, okay, because that was a COVID year. It's
Mm.
23, 30, 53, and minus 5. So that is 48. So you just compare how much is the cash flows that more than the profit. So these two things, that the leverage is going down and the cash flows are much better than the profits, that too when capex has gone up by 15,000 crores, that itself will give you a good idea.
Okay. There is one more request, Gaurav. If you can take more sessions on this valuation and regarding these financial ratios,
Mhm.
because myself being an engineer, I do understand by the grace of Rohit sir, I joined that mentorship program and I know about Elliot now. But this aspect, this is something is my weak area. If you can help it out, even if it is paid, I'm ready for it, because these financial ratios and all these things, the fundamentals needs to be cleared. Otherwise, this valuation investment value part that we are mostly missing.
I think Chavanji can answer this. Chavanji, Rohit ji.
Don't worry, Abhijit ji. We have blocked Gaurav completely for the next 1 year. Okay.
Okay.
Okay. He has assured us that he is always available for us. So we'll try to do more webinars with Gaurav. Okay.
Okay. Thank you,
Yeah.
Chavan.
Thank you. Thank you. Okay. Next up is last question, Saurabh.
Hi, can you hear me?
Yeah.
Thank you, Gaurav. Thank you, Rohit sir. Definitely, I think this session was really useful. As just Abhijit mentioned, that we are always learning about technical, Elliott waves and RMI, but giving this perspective was really, really helpful. At least I have not spent time on valuation, and giving this tool in the strike valuation is really super useful. My two questions, like Gaurav, to you. Uh, Initially, you mentioned about the P ratio cannot be very effective, high growth company and other early stage. So just like sector like EMS or some of these companies which are listed like last 1 year or 2 years, and they are pretty high in the P. How effective this valuation tool to apply to those companies? Is it right way to apply, or do you, because this company doesn't have a 10 years of history, right? Like the way you showed to other like, so I'm just trying to understand how this tool is
Can
effective.
you give
Yeah.
an example? We'll just consider that
Like,
one.
yeah, like Sirma SGS. Let's just take an example of which is a EMS company.
This one?
Yeah, Sirma. Yeah. So yeah, just to, if you can just give your perspective and how to analyze this company from the, yeah.
Just let me just have a look. Just a minute. Okay. So if you see when it listed, it
Yeah,
was listed around say 25 times EV/EBITDA.
correct.
Right now, if you see, it came up all the way double to 50. Right now, it is trading somewhere in the mid value zone.
Right.
So even in such a shorter time frame, if you would have been just following this mechanism, you see that the RMI gave a crossover over here. It went up all the way, became overvalued somewhere over here. The RMI gave a cross down or I would say a sell signal. Again gave a sell signal. And if you say that the stock has come off a bit. So even on a newly listed company with just a 1 year of data, this tool is still giving, I think, good entry and exit points.
Okay. Can I ask just maybe a little more with the question which is coming in my mind? Like, if I look at a 10 years history and apply one deviation and two deviation, which we have put it here, and apply the same level of deviation, because these are a high growth company, like they are giving by 50% CAGR, they are growing like that. Do you think we can say it's overvalued? I mean, that's a point which is coming in my mind. How
You
effective
need
say
to
that?
say compare it with similar companies.
Okay.
Something like say, I
Like
don't know if you
Keynes,
can compare it with some Centum
Keynes
Electronics.
yeah, or Keynes
Or-
technology, maybe the best way.
Yeah, something like that. If you can
Yeah.
compare it with them, so Centum has a long history.
Right.
Or some other companies, if you can find similar companies, then you can do a 10-year valuation of them at how much valuation do they top out at or bottom out.
Okay.
Then you can compare, make a like to like comparison, and then probably decide.
Okay. Okay.
Yeah.
Understood. So I can use some of the similar companies in that
Yeah,
sector.
similar companies, but as I always told, valuation is a mechanism of management, growth, cash flows, and efficiency and operating ratios. So you have to adjust it accordingly. So a high growth company will always get a better valuation and vice versa.
Thank you. Thank you so
Okay.
much.
Thank
Appreciate it.
you. Atul Bhatia. Atul Bhatia.
Hi.
Yeah.
I hope I am audible. Yeah. Hi. Thank you for the session. I'll not take much time. Just a quick. I mean, I understand you guys are working on sector analysis and all, but to quickly seek view of Rohit on this, uh, you know, uh, you can have. I mean, limited resources to deploy at any given point in time, and you see many sectors, seemingly undervalued to be deployed, cash to be deployed upon. So how do you pick up which are the best ones to go with? For example, like a situation may not be like exactly like a COVID, but then many sectors come down. So how do you prioritize? Because I know Rohit is of well researched view on rotation as well. So how do you, I mean, one or 2 points for us, layman person to
So
think about?
we've done a couple of videos on this. In fact, an entire money control video was there sometime last week, which is on YouTube. It's essentially about how you can use heat maps to do, and the principle is very, very simple. That you look for where is the performance during the preceding period, and you choose the preceding period based on where there was a correction or where there was an uptrend or downtrend in the market. Now, one of the very simplest examples we can give you is we know that PSUs have done very well from October till now. But we also know September there was a correction in the market, right? So it topped on the around the 15th of September and the market fell till around the 26th of October. Okay, so let's just
Yeah.
remember those dates.
Yeah. Gaurav, if you can just go to price. Yeah. Or else if you can allow Rohit sir to screen share.
Oh, I thought I was sharing.
No.
I'll just stop sharing. Yeah.
Yeah.
Okay. So yeah, what I was just showing is that, see, this is the correction in on the Nifty chart. Okay. In October, we saw this correction from the 15th to the 26th. So we remember those dates. This is a correction. Okay. Market goes down. I want to know when it starts going up, RMI gives a buy signal on Nifty, which stocks or sectors should I buy? The simple answer is what was performing the best during that decline. How do I find out what was performing best? So under heat maps, we have something known as custom. This is a special tool. You not see it on any other in any other place because it's based on my thinking of how to find rotation, the question you asked. And you put in the dates 15th of September to say 25th of October, okay, and you apply. So what we are looking at now is the performance of stocks and sectors during that period. Okay, that is 15th of September to 25th of October. I think this is somewhere the one not updating because anyway, yeah, I think it's fine. So what do you see? See, basically what I look for is what is at the top of my performance list. And top sector, which is showing a positive return in this time period, is actually the CPSC, which is your PSU sector, followed by FMCG, auto, realty. Okay, so sort of this gives you an idea which are the sectors to focus on, and PSU was on top. So which means that during a correction where the Nifty fell, the PSU index was holding out, and that is by itself a sign of strength. And that is where then you would focus on when the next uptrend starts. It's the simplest thing that you can do. For example, even you can take the most recent correction. So I was showing this example also. You just come to current decline that occurred from the 1st of February to the 14th of February, right? Market was down. Okay, apply this time period. What is on top? Oil and gas and PSU banks. So then moment market goes up after the 14th of February, the sector that should do well is these two. PSU banks are already doing well. Oil and gas also may have been doing pretty well again. And you're also getting the list of stocks within that with a heat map. So within that also you can say, okay, which are the best performing stocks within this. So I go back and focus on a BPCL and IOC, or in a PSU banks, I go and focus on an IOB and a PSB and so on.
Okay. So I mean, then we primarily look at the trading aspect of it rather than the valuation aspect of it.
That was your question. No? I don't know if that was your question or your question was something else.
No. So sector rotation, yes. But what I'm saying is also that, once you see the corrections and you see the valuations also going down, of course they will, right? There must be a reason why they are going down. So, I mean, there is a correlation. So
yeah, so this is definitely not based on fundamentals. This is based on momentum because the time frame is immediate, right? It is not long term. If I've taken a 3-year, 5-year view on a stock, then looking at valuation makes sense. If I'm going to take a 1 month, 2 month, 3 month view, then it is purely momentum, right? At that point of time, it's not valuations.
Got you.
Because you're betting on expensive getting more expensive. The only judgment you are trying to make is the market going to continue to go higher? If yes, then what is the best performing segment right now? And that is what I will want to be in, so that I continue to ride that theme irrespective it's highly valued. That doesn't matter.
Got it. Okay. Yep.
Now there will be another angle to this when we will do RRG. RRG is still not gone live. This tool is essentially you find it only on I think 1 or 2 platforms, probably Bloomberg. But what RRG does is it compares relative strength and price performance, rate of change, and does puts one on the y-axis, the other on the x-axis, and then looks at the change of this ratio across time to be able to tell you which quadrant you're going from. Are you going from quadrant 1 to quadrant 2 to quadrant 3? And that sort of drives your sector rotation. That's another. So your specific question on sector rotation will get more answered there. Okay, you can actually visually see when a particular sector is going from underperformance to outperformance, when it is starting. That you can visually see when you look at an RRG chart. So that should come online after some time.
Yeah. Okay. Yeah.
Okay. Anyways, thank you so much, Gaurav. Thank you so much, Rohit. With this, let's wind up. People, if you have not yet subscribed to Strike, right time you use the tool. I'm sure this is going to give you a lot of Okay, last question is from Sandeep Garg. Okay, we'll take up this. Yeah, Sandeep ji.
Hi, good afternoon. I'm so sorry for the last question. I want to thank Rohit, Chavan, and Gaurav for this presentation. It was great. I'll ask my question really quickly. It was regarding the valuation. I'm looking at Coal India. If you look at Coal India on a weekly or a monthly chart between 2015 and 18, the prices went down, but the valuation, whether that is EV, beta, or PE, went up. So how do you look at that? And my second question would be like if a stock is in a monthly chart on a wave three or in a wave three, wouldn't the standard deviations change? Wouldn't the parameters change, and how do you work with that?
Rohit sir, you want to take this one?
I'm not sure I fully got what he's trying to say, that okay, if something is going into a third wave, will valuations remain extended? I mean, I hear the question is the same. They may or may not, depending on how fast earnings also grow. Initially,
Yes.
it will appear to be extended, and then earnings will catch up, and then it will stay there. So then somewhere you'll have to follow the price momentum model. Okay, as long as price and momentum are intact, you do not really give up on that. So the
And the
bet
first question regarding Coal India was, could you repeat that one?
Sandeep, you're in mute.
Could you repeat your first question regarding Coal India?
Okay, sorry, I muted myself. I wasn't able to unmute. My first question was on Coal India. The question was between say mid 2015 and 2018, the stock price went down, but the valuation, whether that's PE or EV EBITDA, went up. So there was a divergence between the price and the ratio. So how do you view that?
So you're talking about this range from 2016 to 18, this
Yeah,
part.
yes. Or you can even look at the peak in mid 2015, like when the price and the ratio were moving together. And then in 2018, prices did not make a new high, but the ratio did.
Yeah, this is because maybe the earnings got suppressed over here. That is why the ratio went up, even though the price kept on going down, because the stock, I mean, not even this stock, most PSUs kept on derating after derating because there was some OFS or some issues with, I mean, may the market also went down. Profits may have gone down. This is why the valuation optically went up. However, see, it never gave a buy signal over here because you never buy at the higher range of the valuation. When it actually started giving a buy signal was somewhere say around this range, say 147, or even if you may call this range 120, all the way it gave multiple buy signals till I think that the 230 range. So it gave you around 2 years of accumulation. As soon as it gave a range breakout, or if you may call a trending move, it went up all the way from 250 to 480. So just because of one divergence over here that the valuation went up, you at least should not get into the stock at this time. Even if you wish to sell, you can sell out or book out partially, but this is not really the time to get into it.
Understood. So actually, my question was that only, like, for example, if it's giving a divergence and on a monthly, say on a RMI, you get a sell signal and the averages are breaking and price is not confirming the ratio, would you treat that as actually as a sell signal?
Yeah.
Yes. Yeah. Yes.
Okay.
Yeah, it is a sell signal. High valuation and RMI sell on the monthly also was there. It was a sell signal.
Understood. Thank you. Thank you so much.
Okay, with this, thank you, Sandeep. Let's wind up. So those who have not yet subscribed, please do subscribe to Strike. Start using it. It's a wonderful tool. Lot many things are coming up. Uh, I hope this session was good. Thank you, Gaurav, for again taking out some time and doing this session. Gaurav is actually an individual investor. He's not associated with Strike, but he's like a family member of Strike now. Uh, long term associated with him. It's always great to work with him. Thank you, Gaurav.
Thank you, Chaman.
Yeah.
My pleasure.
Yes. So to all the attendees and who are watching this recording, start using Strike. This is the best analytical tool India is having. I'm sure Gaurav also will vouch for it. So thank you guys.
Thank you, everyone.
Bye bye.